Hello, I'm Dr. Cheryl Dunn, and I'm here to demonstrate a problem with the time value of money for a fictitious company called Bucklaker's Company. Bucklaker is going to be making an investment, and we're going to determine what the value of that investment will be after 5 years. So take a look at the problem. Pause the video for as long as you need to read it. Okay, there are several things that you should take from the problem description. The first is the fact that there are 20 quarters in 5 years. The second is that the 4% interest rate that we're given is an annual interest rate, but it's compounded quarterly. And so what we want to do is convert that 4% into a quarterly rate of 1% per quarter. The next thing we have to realize is that a series of payments that are made equally in time, where the payment is made at the beginning of each of those equal intervals, that's called an annuity due. So we have an annuity due situation. And the fact that we're trying to figure out what the value will be at a future point in time means that we're trying to get the future value of this annuity due. We could draw a timeline for what this payment stream looks like. That might help us see the big picture of what's going on. And what that says is that basically here we're sitting at period 0. We're going through quarter number 20, and in between there we're going to have 20 payments altogether. So on our timeline, we're going to basically have payments that start today and then continue each quarter on out to the beginning of the last quarter, which will end at the end of the 5th year. We're not going to include a payment on the end of that because we're wanting to know what's it going to be worth on this day. We're going to assume we're not going to make a payment on that day. So again, this is an annuity due situation, and we're trying to figure out what is it going to be worth on the last day of the 5th year. In order to do that, we're going to find the future value of an annuity due factor from a time value of money table. Take a look at this time value of money table and see if you can find the future value factor that applies in this situation, which will be the factor at n equals 20, because we have 20 payments that we're looking at, and the interest rate equals 1%. That's our quarterly interest payment. So we've got the number of quarters and the quarterly interest rate. So take a look at this table. As you saw from the table, the factor that we're interested in is 22.2392. Then we simply multiply that factor times our payment amount of $1,000, and that tells us that this investment at the end of the 20 quarters or the 5 years is going to be worth $22,239.20. So this is our answer for how much Bucklakers will have at the end of the 5 years. That concludes this demonstration. Thank you for viewing, and have a wonderful day.